there is opportunity in every down cycle. I've been, as again, very combination of luck, hard work, and blessings, that cycles have generally been not only survivable and not only manageable, but profitable for us. The best advice I give to anybody looking at getting into business is try and be as lowly leveraged as possible. The less debt you take on, the more you're able to manage through cycles.
Joseph, thank you so much for joining me on the Let's Talk Business podcast.
It's my pleasure. It's good to be with you.
Yeah, and a shout out to Ushi Teitelbaum. He connected us, and I know he's always connected to the right people. And I think I'm very excited today to have this conversation because we'll be touching a topic that I know a lot of people are looking to invest in, are investing, and if we could help even one person, it's definitely worth our time.
Absolutely. And I started very small many, many years ago, and one person helped me, and that's how we create blessings and create wealth and create comfort, and hopefully it all leads to blessings and lots of tzedakah.
Beautiful. So let's talk about your beginnings, because I know there is a story how you started with something about $400 at the very, very early age when you went away from home. So let's start there.
Well,
bring us a little bit back to the history.
So let's just say it was not my brightest moment. However, I grew up in very modest circumstances. My mother and I lived with her parents, and my grandparents were just wonderful people and a blessing, but we grew up in very modest circumstances. And not unlike a lot of young people, I was not the best behaved. And it led to, when I was 15, I was both in regular trouble at school, and I was also in trouble at home. And my grandfather said to me at that time, he said, "You can't afford to smoke cigarettes. They're bad for your health and they're expensive. And if you want to live at home, I won't have you smoking cigarettes." And I pulled myself up by my bootstraps and very foolishly gave up free room and board and said, "I'm leaving home."
Oh,
And
wow.
at the same time, we had also gotten a notice from my school that if I didn't start to behave, I was going to be expelled and I would not be invited back. Now, there's kind of an interesting sidebar and a wonderful outcome to this, which is the reason they couldn't really get me in much trouble at school was no matter how much trouble I got in, I always had straight A's.
Oh,
And I
wow.
had performed extremely well, despite the fact that I was usually in trouble and skipping class and doing everything that I would have punished my own children for doing were that today. Fortunately, at that time, a guidance counselor took pity on me and said, "He's gotten all these good grades, but he's always in trouble. Maybe he's just bored." And they gave me the SATs, and I scored exceptionally well at the age of 15. And they said, "Well, maybe he'll do better if we send him to college." So fortunately, I was lucky enough that this guidance counselor took pity on me and had made some arrangements for me to go to Cornell University at the age of 15. And so I skipped 10th, 11th, and 12th grade and went to college at a very young age. My first semester did not do too well because I thought the same thing could be repeated, that I didn't really need to go to class and I could get straight A's. And my first semester, I did not do well. And then I realized I better grow up, and I did. And after that, everything went swimmingly well. Worked my way through college. I had to work the whole time. We didn't have money. I worked my way through college, worked my way through law school, and as they say, the rest is history.
Wow, this is an interesting story. At which point did you decide that real estate is the place where you want to focus most of your energy in?
Well, ironically, when I was very young, starting early, I had to have a job before school. And my grandfather had gotten me a job working in an apartment building where I would go. This is before fifth grade, sixth grade. I was very young, and I'd get up very early in the morning. I always had a good work ethic at my jobs because I liked earning money. And so I would go and sweep the halls and mop the floors and polish the brass in this apartment building. Then I'd go to school. Then after school, I'd go back and help the maintenance man carry his tools and the like. And I learned a lot about apartments. Now, the result of that was that I said, I never want to see an apartment again. I want to have nothing to do with real estate, and I'm going to go to law school so I can make a lot of money. So I went to law school, and I went to work for a fund that has long since gone away. But the fund was involved in real estate and a number of other businesses. And so I was involved in the legal aspects of real estate. And one of the people at the fund had heard the story that I, quote, knew a lot about apartments. Well, what I knew about apartments was how to fix appliances and how to fix toilets and how to mop the floor. But I played along and said, yes, I know a lot about apartments. They asked me to get involved in what was then a very early apartment company. And now we're going back to, 1990. And at that time, I got involved in the real estate company, became the COO, and was very involved in the operations. And then I said, again, very nonchalantly, I think I should be running the company. And the fund said, well, we love you and we'll give you a raise and we'll give you a new title, but you're only 35 years old. You're not going to run the company. And I said, well, I think I can do it myself. And long story short, again, I was lucky. I had one mentor who became my one investor. And my wife and I took every penny that we had and partnered with one person and bought one building in St. Petersburg, Florida in 1996. And again, as they say, the rest is history. Hashem looked down on me. I worked hard. I went from being a corporate lawyer to being the maintenance man again and the leasing agent and did everything. I was the leasing guy. I was the property manager. I did whatever I had to do. But one property very quickly became three, and three became five, and five became 10. And I started the management company, and I realized it was much better working for myself. And I started getting investors, and the investors got bigger and bigger and bigger. And as they say, one thing led to another.
Just for our listeners in context, so currently you have offices in New York, Tel Aviv, and Dubai. What could you share as far as the size of the portfolio of the multifamilies and hotels that you actually have in the portfolio?
Sure. Well, I've been very blessed. As I said, I was always a hard worker. I always believed that if you give, you shall receive. I always believed in tzedakah. My wife and I always felt give till it hurts, and we did. And I believe that Hashem liked that Hashem was my partner in every deal. And I think that really accounted for our success, as well as working extremely hard. I'm still the first person in the office. I'm usually in the office by 5:30 in the morning. And I love what I do. I've been blessed doing it. And I've also been very lucky with the people I've been able to attract and retain as my team members. But particularly, and this is very meaningful for those of you in Israel, in 2007, I was lucky enough to meet the principals of the Salkin family, who are the principals, as you may know, of Elko and Electra in Israel. Yeah. And they became my partners here in the United States. And we were able to grow the companies together under the banner of Electra America, where I've worked and partnered with them now for 17 years almost, I think. And we've grown first the multifamily platform, which is our flagship. And then we also have holdings in hotels. We have holdings in single family home rentals. And we also have a small capital company that is essentially a boutique bank in the real estate industry. Mm-hmm. Today, American Landmark in the U.S. has approximately 800 full-time employees, and we own and manage approximately 36,000 apartments, which is really incredible. But I've just been very blessed with the team members. My key people have been with me. My president and CFO has been with me for 18 years. My chief investment officer has been with me for 11 years. My chief operating officer has been with me for 15 years, and so on and so forth. I've been lucky enough to partner with a wonderful family and a wonderful team at Elko and Electra, and together we've grown the business and done wonderful things. And it's been good for all the team members. And also, very importantly, I think we have three constituencies that we report to. First is our customers. Customer service is everything. Giving people a good, affordable, clean, and modern place to live is part of our mantra. It's part of our mission. Number two is to provide great returns to our investors. And we have wonderful investors around the world. We have capital markets offices in New York, Tel Aviv, and Dubai. And we have investors from sovereign wealth funds to insurance companies to pension funds on a global basis. Most of our investors are, in fact, institutional although we do have individual investors as well. And our third constituency, of course, is our team members. We have to grow a great company that provides people with a good life-work balance, with a happy, healthy, and enjoyable place to work, not where people grind it out, but where they want to come to work and where they like the atmosphere and like who they work with, and that they see opportunities for advancement for themselves. And I think by being really attentive to those three constituencies, we've been lucky to grow our business and, of course, reap significant financial rewards.
This has been great. And I know that one of the things that it's so important for leaders is to be able to know who they're working for, like knowing to ramble off the three main key factors, what you focus on every single day. I think it's so important. And sometimes we lose sight as business owners, we lose sight of any of those constituents, and then all of a sudden everything falls apart. So it's great to know that while we need to focus on each individual, we need to make sure all three of them are properly focused on. I want to ask you some additional questions, but I do want to make sure our listeners took note when you said before that you took Hashem for your partner and you said, yeah, I need to give until it hurts. I think that's something that our listeners to take note, because sometimes we say, when we will be wealthy, we will give. And that goes against what you just said. It has to hurt. So which means that sometimes you have to give before you have the full wealth sitting in the account.
Well, that's right. And, Hashem, as we know, doesn't judge us by how much we give. Hashem judges us by the giving spirit, that we give what we can. Hashem doesn't want us to scrimp. Hashem wants us to lead a good and comfortable life. But Hashem also wants us to care about our fellows, about our community, about our world, about our fellow Jews, and about others, non-Jews as well. We have to work to heal the world. We have to contribute. And I believe that, as my rabbi says, Hashem is a mirror. If we give, Hashem gives. And so my wife and I and my family, even when we didn't have much to spare, we always felt we would give whatever we can, whenever we could. And for me, I'm living proof that it's been a reward. And honestly, it sounds corny, it sounds trite, but it's never failed in my life. The more we give, the more we've received, the more that we've given. It's just always been fortuitous. I don't want to say it's been surprising, because I don't think it is a surprise that we would give something maybe more than we could have expected, and a deal would come up, an opportunity would come up. It never failed that wonderful things would continue to happen. And this is something that I've taught my children, that it's important to them. And of course, I work for my family. I work for my wife. My wife thinks I work primarily for my wife, which is fine. But of course, she's been a partner. I'm now married 37 years. My wife has been my support. My partner has raised wonderful children in our Jewish tradition. And I could not have done it without her, of course. But giving is something that we think has got to be in our DNA. It's not just what the Torah says to us, but it has to be in your DNA and passed on.
Beautiful. I want to get to some questions on the real estate side, and then we'll come back to your business as a whole. First of all, obviously, we can't ignore what everybody's saying about the recession is coming, the real estate market is collapsing. You've been around for a couple of cycles already. With this amount of multifamily apartments and so on and so forth, we're not asking of what you think is going to happen. What do you feel is the current state from your perspective?
Well, certainly we're approaching what I would call a down cycle in the real estate market, certainly in the U.S. and probably globally. I don't think it's from any fundamental weaknesses in real estate. I think it's been caused by the debt market generally and the concerns about recession. My comment about the United States is here, the Federal Reserve, as a result of COVID or poor decision-making, went crazy one way with low rates, and now they've gone crazy the other way with high rates. I don't respect or support either one, but it will return to moderation. I don't know whether this is the fourth or fifth cycle I've been through, but to quote the famous Baron Rothschild quote, buy when there's blood in the streets. So there is opportunity in every down cycle. I've been, as again, very combination of luck, hard work, and blessings, that cycles have generally been not only survivable and not only manageable, but profitable for us. The best advice I give to anybody looking at getting into business is try and be as lowly leveraged as possible. The less debt you take on, the more you're able to manage through cycles. We've been very lucky that we've always been, and I thank my partners for this, that we've always been able to be a low leverage real estate company. Some people think that's contradictory, but I think that's safety. We like to sleep at night, so I encourage people. Certainly, you need more debt when you're starting, but it's better to have partners than it is to take on debt and partner with lenders, because lenders are predatory and good partners are good partners through good and through bad, as my partners have been to me. I see in this current market, there's opportunity. There's opportunity where perhaps others who've been less well advised in their borrowing or overpaying, and not that we're bottom fishers to take advantage of other people's misfortune, but there are opportunities to take advantage of. There are ways to navigate these cycles and to do so successfully. So I think that cycles are something that must be expected, that must be anticipated. Many people built their business on the low interest rates of the last few years. I think that's probably unrealistic. Just like those interest rates were unrealistic, today's interest rates are unrealistic. So right now we're being far more cautious than we would normally be, and that's okay. For people who are thinking, is this the right time to start a business? It just might be. There could be opportunities out there to take advantage of situations when times are tough. I can tell you the first deal that I bought, day one, I was in the right place at the right time, and I bought a property from a bank where someone else had defaulted. And that was
Wow.
how I was able to get my start. It was 144 units. I'll never forget it. It was called King's Inn on 54th Street North in St. Petersburg, Florida. And it was not an attractive building. And I did a lot of work myself, but I was in the right place at the right time, and I took advantage of an opportunity. So I would say, don't discount the cycles. Look for opportunities in all the cycles, but be prepared. The cycles will come and will go.
Speaking about cycles, I did realize in your portfolio that you're mentioning hotels, you're mentioning multifamilies, you're not mentioning any commercial or office buildings. Is that deliberately?
That's deliberate on my part. When I was working for the fund, I had an opportunity to view many different types of real estate, and each one is its own specialty. My specialty happened to be multifamily and apartments. Since then, I've partnered with others in the lending business, people who had better knowledge than me. I've partnered with people in the hotel business, people who had better knowledge than me. I'm the first one to acknowledge that surrounding myself with people who are smarter than me and who I learn from and still do each and every day is one of the keys, in my view, to success. When we first decided to look at hotels, it was an opportunistic play. We saw that hotels were in trouble during COVID. Many were closed. A number of the ones that we bought were in default or were closed. And we felt that by partnering with the right partners, and again, I partnered with a wonderful family out of Philadelphia who I had known and who were extremely well respected, and they joined us as the operating partner. And Electra and myself partnered with them. And so far, it looks like it's going to be successful. It's still early to tell. But I always felt and saw that, in my perspective, office and retail had a very different risk profile.
Yeah.
Land had a very different risk profile. Now, there may have been greater rewards, but there also were greater risks. And I felt that the most secure risk-adjusted return, in my view, was in multifamily. And there's a number of reasons. I won't get into all the detail. Similarly, a choice that I made, again, I don't know if it was smart or luck or both, but I felt in the United States that the focus of growth, the focus of population growth, job growth, industrial growth, manufacturing growth was going to be in the southern states of the United States. So at that time, I decided I wanted to focus on multifamily, and I wanted to focus on what we refer to as the Sun Belt, the southern United States. There are many people I know who are extremely successful in retail, in office, in industrial, but they're specialty businesses. And even within multifamily, I don't do student housing. It's a specialty business. It's a good business, but you need to understand it. military housing. It's a specialty business. You need to understand it. So I follow the old rule: stick to what you know and know what you don't know.
That's great. I want to ask you a follow-up question to that. Just knowing that you do have a lot of, parts of your portfolio in New York, what do you say to, I know that a lot of multifamily owners have issues now with rent rolls and how the government is reacting to the landlord-tenant fiasco, so to speak. Is something that keeps you up at night, so to speak, or you mentioned before you're sleeping at night?
Yes. Well, first, the answer is I stuck to my guns when it comes to Sunbelt. We do own some hotels in New York. I don't own any multifamily
Oh,
anywhere north of Richmond, Virginia.
oh,
And
okay.
again, a lot of families have made fortunes on multifamily in New York or Chicago or LA. Personally, again, I feel it's a specialty business. The government laws in New York for how you can renovate, how you can raise rent, how you can evict tenants, how you can accept government tax benefits and government subsidies and Section 8. It's a specialty business that requires very sophisticated knowledge. And frankly, I'm not that sophisticated. In most of the southern states where I operate, we don't accept any government intervention. We don't have any rent control. We don't have any of those government, I believe, the heavy hand of government. And there's a place for that. There's people who need that subsidy and that support. And a lot of people have made a lot of money in that business, but that's beyond my purview.
You mentioned before about land is also a different business. Are you specifically calling out full ground ups, or like when you speak about multifamilies, you also involved in any ground up multifamily projects?
Well, yes. So I differentiate between what I call development and building. Those are two different things. And development, we don't participate in. That entails buying land, getting the appropriate permits, the government approvals, the zoning, the entitlements, the paying the fees, dealing with committees and boards and homeowners associations. And to me, again, that can be a very profitable business, but it's a specialized business. And I didn't want to be involved in that as an attorney. I felt that that was just too complex and a very high and very long-term risk profile. So where we will get involved is that's where I differentiate between development and building. We will do new build, but only if it's ready to build.
Got it. So there's permits and there's everything good to go.
Exactly. What we call shovel ready.
Shovel ready. Got it. So let's turn to the listener listening to this, and maybe you could bring us back to your starting point as you mentioned before. Let's teach them how to fish instead of giving them the fish, so to speak. So if somebody wants to enter the real estate market, regardless of the scenario, where would you say what are the do's and don'ts that you would just ramble off to a start? Obviously each sector in real estate is different, but what would you say that are the fundamental do's and don'ts?
Well, like I did, certainly a good education helps. Whether you're in law or whether you're in finance or whether you're in banking, those tend to be conducive to getting involved in real estate ownership. Of course, if you have a wealthy family, that helps. But assuming you're starting by yourself, I recommend first take a job, learn from somebody else. Don't go out there alone. Don't go out there inexperienced. Like I did, I worked for another group. I got involved. I saw mistakes made. I made mistakes, but I'd rather make those mistakes when I'm working for somebody else. So that's number one. Number two is go to meetings, go to seminars, approach people, ask people questions, read everything you can. I highly recommend there's a book by Peter Linneman about real estate investment. He's a famous professor at Wharton, and he also does a monthly report. I find his books in particular very sophisticated. They sometimes, even for me today, I have to read his reports twice to make sure I've gotten the gist of it. But read, of course, everything you can. Be very attentive to the bottom line. Watch your dollars, watch your cents, watch your expenses. A lot of people look at the income side and perhaps don't pay as much attention to the expense side. It's what's left at the bottom that you get to keep. So you could say, oh, I've rented all these apartments, but if it's costing you more to rent them and more to run them, obviously doesn't make sense. And the other thing is start small. People say I started with a pretty big building, which was 144 units, But of course, in those days, it wasn't that expensive and the rents were pretty low. And I got a very good deal. So I say start small, multiply, use your smarts to grow, use the Yiddish cut as you can, use the Yiddish cup as well. You need to have both. Make Hashem your partner, do it up front. That helps, in my opinion. It truly does. And also, then there's the fundamentals. You need to reach out to banks. You need to reach out to other lenders to see, is there any opportunity? Is there something? Is there someone who's in trouble? Is there someone who's defaulting? Is there something available? Reach out to brokers in trying to acquire. Say, look, I don't want to be a bidder. I never want to be the guy who stands up in the room and says, I'm willing to pay more than anybody else. That's just not a good idea. You need to also stay under control. Don't get involved in bidding, higher, higher, higher. If someone else wants something really badly and they can afford to outbid you, let them outbid you. Don't worry. But take your time, find the right first deal, find the right second deal, find the right third deal, and then surround yourself with people smarter than you.
That's great. I want to ask you one more question on this. What we just discussed is sometimes you could see people that are doing pretty well in real estate, and all of a sudden everything is falling apart. What would you say? You mentioned in the beginning about over leveraging yourself. Is that usually the cause of what you see when you say distressed portfolios?
Yes, absolutely. That's the biggest problem. Or also going outside their area of expertise. I've seen many people in my business, and I've been asked by investors, why don't you expand to this state or that state? Why don't you go to Europe? Why don't you've got such success and you've got good systems. Why don't you expand it? I tell people with all due respect, I say, I will look as dumb in Portland, Oregon, as the guy in Portland looks when he comes to Miami. You need to have boots on the ground and know and understand. In real estate, people joke it's location, 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 but I say it's knowledge, discipline, and location. You need to have all three. So I'm very lucky in that the markets that I work, I have boots on the ground now, people who I know and trust who can tell me, this street corner is good, that one's not. This neighborhood's good, that one's not. And for a variety of reasons. It has many different factors. And of course, the other thing is a lot of people today, especially people come to me all the time. Mr. Lubeck, why do you worry so much about what people tell you on the street? We have artificial intelligence that can tell you everything you need to know, and we'll tell you where to buy. And I say that's great. We consider all that data. We have 3 major artificial intelligence services that give us the latest and greatest data, and population data, and census data, and crime data, and who lives where, and why we should be on this corner and that corner. And we look at all that. We consider all that. But at the end of the day, the real decision is that I know and trust somebody in Austin, Texas, who tells me that property has a bad history or that location had a bad history. Now, not that you can't solve that problem, but I prefer to take the path of least resistance.
That's great. Let me ask you another question, and turning it from, you mentioned before about investors. Unfortunately, we've seen a lot of Ponzi schemes or different people turning to different people for investments. Let's talk about somebody that wants to invest with somebody that has a portfolio in real estate. What are the things the investor needs to look at in order to make sure that the money is being put in the right place?
Track record, track record, track record. Number 1, how long have they been doing it? Number 2, speak to their other investors. Number 3, again, with all due respect, are they audited and who's their auditor? Because you need to, as the famous Ronald Reagan saying, trust but verify. I can tell you there are issues here in the United States and there are issues elsewhere, particularly for the small investor, where someone says, oh, with me, you can only invest, I'll take $25,000 or $50,000. My suggestion to them is go to the stock market where you can count on the numbers and everything is audited, and invest, even in the United States, invest in a real estate trust, invest in a publicly traded company if you're an investor at that level. Most of our investors now, we've been very blessed, are institutions who are investing a lot of money, but they are not taking personal risk. They know who we are. They check us out every year and every quarter. We send someone who doesn't send regular reports on every property, someone who doesn't hit their budgets. You need to check those facts before you invest. But particularly if you're investing your life savings, I recommend public companies, whether it be on the New York Stock Exchange, the NASDAQ, the Tel Aviv Exchange. Invest with public companies where there are also audited firms and other people watching out for your interests.
So you suggest somebody that has, like life savings and they want to put, have something in a real estate portfolio. So go that route.
Of course, not that we don't want your money. Trust me, we would love to have you invest, but particularly, of course, always diversify your investments. I do for myself. But with my own family money, which is now really my children's money, I invest a lot in the S&P 500 index. I invest in my competition, in publicly traded REITs. And of course, my biggest investment is still in myself and in my partners at Electra. But also, I know the numbers are real and I know the numbers are good. And whether you trust me or not, it's very important you trust Ernst & Young.
Yeah. So let me ask you more of a personal question, if you don't mind. So you sold a company for $2 billion in 2016.
Yes.
Yet we're speaking now in 2023, and you're mentioning that you're the first in the office almost every day. Why? What motivates you to continue doing this and grinding?
Well, again, it sounds corny, but I enjoy what I do. As you can tell, I'm enthusiastic.
Absolutely.
I like what I do. Also, very importantly, and all men, not just Jewish men, can appreciate this. My wife and I get along wonderfully for 4 to 5 hours a day, and she doesn't want me home. So that is truly part of it. My wife says to me, "I married you for better or for worse, but not for lunch." And this is true. She likes me working. But in all seriousness, as I said, I'm learning something every day. I've always had a good work ethic. I like what I do. I feel I'm being productive, not just for myself, but for Hashem. I've been able to be very blessed with what I have, of course, and what I can give just as importantly. And that remains very important to me. I continue to work very hard on charitable endeavors for myself and my family to give and create in the world. I also like the people I work with. I like what I do, and I feel that we're creating things for the world. We're creating good, affordable housing stock. We're renewing housing stock. We're creating jobs. We provide health care. We do a lot of these very positive things, in my opinion. Not that we're perfect. We make mistakes every day, and we learn every day. But my retirement lasted about 12 minutes. And, we had, at that time, we sold the assets, but we did not sell the company. And we were offered even more money if we would sell the company. And I said no. And my partners said no. And the Salkin family and I have been just wonderful partners. And I was asked recently how many more years I want to work. I said, well, my father lived to 93. So as long as I can, they'll take me out of here in a box. I really do enjoy it. And it's part of my persona, if you will.
Beautiful. So we spoke about charitable and philanthropy. How much do you connect that as part of the business culture, or you keep that separate from the business ethics and everything done in the business side of things?
No, we consider that giving back, both personally and corporately, is very important. And today, many of our investors also appreciate that, yes, we do give away some of the corporate earnings, and we're involved in community programs. We're involved in philanthropy. We're involved in training. We're involved in everything from food raising to helping artists. And in fact, two of the things I'm very proud of, and you'll forgive me for bragging, but last year, our company, American Landmark, won the National Multifamily Executives Award for Social Action with a program we have called Artists in Residence. And Artists in Residence is to help poor artists get a leg up and get a start. And
Wow.
we hold a contest for artists, and we now have, I think, 10 or 12. We offer them, the winners of the contest, get a free apartment for a year and a stipend in exchange for giving art lessons at the community to the
Wow.
people who are living there.
So
It's
it's a
a
double win.
win-win-win.
It's a double win. It's a double win.
Everyone, it's a triple win because our
Triple win.
company wins. We won the award. The residents win because they love the art classes, and the artist wins. So that's one. And then we set a record this year where we won the same award again. Shocking. They said it's the first time the same company won twice. We're actually getting the award next week in Dallas. It's a big national award from Multifamily Executive. It's a national award. And this time we won for a program called Millionaire Mastermind Academy. I didn't come up with the name. I'm not sure that I like some of the connotations, but it's a wonderful, wonderful program started by a Black pastor. And her goal was to provide access to business, economic growth, and capitalism to single Black mothers in the United States. And we all felt these are people who are single moms who are probably working very, very hard, but who don't have access and don't have the hands-on education of how to grow a business. And our goal was for them to become employers, not employees, that they should find ways to start their own businesses. And there's been numerous. We have, of course, a mentoring program. We have a intern program. We have classes, and we've done that in Tampa, Dallas, Phoenix, Atlanta, Miami. And so far, first, it's been very successful in starting a number of businesses, number one. Number two, we've actually hired some people who've come out of those programs to become property managers, which is great. So my goal there was to grow capitalism, not grow charity. And that was another example of corporate tzedakah. And we really firmly believe in that. And on a personal level, of course, I do what I can, where I can. And part of my reason for continuing to work is I want to do more. And of course, it makes me feel good to do. It makes me feel proud to do. But most importantly, I think we can have an impact. And not only giving back, but paying forward.
This is beautiful. And ultimately, being able to support so many people working for you, that's part of the charity just in the office and getting them to be experiencing
Well, no,
what
that's
they do.
not charity. That's giving an opportunity. That's
correct.
We give an opportunity for them to make more of themselves and to make more for us. Frankly, by being happy and team members and productive and growing the business and advancing themselves, they're also helping the company. So it's, again, a win-win.
Beautiful. This has been great. Let's close with the 4 rapid fire questions. Are you ready?
Oh, I'll try.
Number 1, a book that changed your life.
The Torah, the Bible.
That's beautiful. Number 2, a piece of advice you got that you'll never forget.
My mentor told me, don't borrow too much.
Number 3, anything you wish you could go back and do differently.
No, I have to say that sounds corny. Of course, I wish I had given more earlier. Maybe I had worked harder, but the Rebbe says you are where you're supposed to be and you're there for a reason. And I believe that particular bit of wisdom.
Love it. And last and final question, what's still on your bucket list to achieve?
Well, I hate to be corny, but I want to spend more time in Eretz Yisrael. I want to continue to grow the company, and I want to have more grandchildren. And unfortunately, that's a little out of my control. So I may need to speak to my children about getting to work.
Joseph, thank you so much. I know your time is valuable. That is why, in the name of our listeners, we'll forever be grateful for sharing some of your time with us today. It's been a blast. Thank you so much.
Thank you. It's been fun, and it's a blessing and an honor. And thank you for giving me the opportunity to get on the soapbox.
My pleasure.